let's discuss the market road forward with Alok Singh also joining us on the show. Alok, how are you making of index being almost flat, but a good shakeout continues? Are valuations getting in attractive territory in your view, or do you think that it merits the kind of valuations they were commanding and the kind of earnings reality which lie ahead? There's still some gap for catch-up to happen.
So, if you look at what is, it's a classic book which has been getting played in the market, whether it is from the sector-wise, market cap-wise. So, what we have seen in the large cap indices is some amount of the catch-up game which has happened. And if you look at what has led to it is, some amount of IT and FMCG back. So FMCG is also somewhat of the mean reversion is happening for the some amount of underperformance which we have seen in the recent past, and which has been at a cost of mid cap and small cap getting shot down a bit. Now, if you look at obviously the correction over there looks sharp, as you also mentioned, some of the well-placed names are also, but that has to do with the volumes over there, and they always behave like that. But yes, if you ask me from the valuation point of view, I don't think the if I look at, I don't go like 2-3 years forward, but if I just look at 1 year forward, whether it is mid cap index or the small cap index, they look reasonable. And when I say reasonable, is near to their long-term averages somewhere there, marginally here and there. So if you look at from that angle, yes, the biggest concern which anyone has is, okay, if it is near long-term averages or things like that, what is there for me to hold from here, and what is that I will get from here? So the answer lies is that the way the balance sheets have repaired, whether it is a good small cap company or a mid cap company, you are seeing a decent amount of deleveraging happening over there, and the balance sheets are ready to take up the next growth leg, provided that growth happens. And as what we are seeing right now, the growth is happening. And that will lead to the new capexes in the manufacturing or the new capacity build up in the services sector, and they are well placed to take advantage of it. Yes, some of this will have happened because of the unorganized to organized, and China plus one. There are a lot of things which are happening, but these are all long-term things which will play up over the period of time. So I think overall, this is a healthy correction. There is some, and the market has been doing this quite often. Rotation of capital is happening. Yes, obviously with 16,000 plus on Nifty, there is a psychological resistance which is there, and which will take some time to pass through. Until such time we may see a volatile.
Right. Alok, what is the ground reality when you speak to managements on ground of all sectors, all various kind of sectors? How's the economy improving? Because after all, that is going to impact in the quality of earnings as well. Up till now, it has been good, but do you see the earnings quality sustain on ground? Things are improving.
I think the biggest thing, and which I think is important for me when I look at it, is that yes, there has been, if you look at for last 3 months, there have been a lot of headwinds on the input cost side, whether it is from the metals or anything else, and which has impacted to the margins, and which we saw the last quarter margins, there were impact over there. But I haven't found many management showing inability to pass on. So which means that there is a growth, there is a demand, because otherwise this ability to pass on the input cost rise is not that easy many a times. And as of now, if you look at the commentary, that appears to be suggesting that they should be able to do that, and that happens only when there is a growth. And second, as I said, that because of the deleveraging happening across, obviously even at the slightly lower margins, business are sustainable. These businesses look good. Business are able to reinvent themselves. So I think overall, at least from the listed space point of view, I'm not too sure about the unlisted space, but for the listed space which we track, I think that the commentary suggests that there is a demand. And of course, now for India, we are entering into a mega demand phase, which is our festive season. Next 3-4 months will decide how much they are able to pass on, how much actual demand come out to be. So I think we have to wait for another 3-4 months to see whether what is thing. But overall, I think the lead indicators looks good.
Right. So where do you find margin of safety in such a market, Alok? What kind of portfolio construction have you had in terms of sectors, not stocks, but the theme which you are addressing?
So if you look at it's very difficult to take a short-term call in terms of margin of safety, but certainly if you look at the way the things are on the ground, so I think something like auto, which has been beaten down, looks reasonable. Yes, there is a lot of noise about EV, but this is some time away. So I think they have corrected and look reasonable. Banks, as such, looks reasonable because of the fact that the balance sheets have repaired. The only missing link over there is growth. And if the demand persists, I'm sure there will be a capex, and there will be a capex led lending which will happen and which will bring in the growth. So I think these two larger space, if you look at, are there. Of course, if you look at the IT typically look expensive, but I think they are getting re-rated. Because way the world is changing, and I think they will, there also I see a lot of margin of safety.
Right. All right, Alok, we'll let you go on that one. Thanks so much for joining us with your take on the market.